Hello everybody and welcome back to the channel. In this video, I wanted to make a video in regards to the first trading strategy which I used and actually proved very successful for me and ended up allowing me to get funded with my first proprietary trading firm. This was a couple of years back, and since then, I do not actively use this system as much, but I think that this system still works really well, very well, and is a great beginner strategy that you can start to use today to find more consistent gains in your trading. So let's get right into it. So this strategy is very simple. It only has two indicators on it and is an entirely mechanical trading strategy. Those two indicators are a Bollinger Band and a stochastic oscillator. Stochastic oscillator, if you have not been familiar with it, if you've not used it before, is just a oscillating indicator, just like a MACD, just like an RSI, and it's essentially the same. In this case, we're using a stochastic oscillator with the settings of a K-length 5, a K-length smoothing for 3, and a D-smoothing at 3 as well. This depends on the chart time frame right here, so you can leave it as that. The other indicator, as the Bollinger Band, is going to be the standard settings on the Bollinger Band with a length of 20, a source of close, a standard deviation of 2, and an offset of 0, with the time frame set on the chart as well. So this is very basic. We're going to go and look in the Bollinger Band rules right now, in which there's a checklist that I have made for you guys, which provides exactly what you need to do to find consistency with this strategy. So I usually copy this and move it onto my chart, and what I'm going to look for is an engulfing candlestick. The stochastics are pointing and crossed in the direction of the trade. The setup candle is off of one of the Bollinger Bands. There is protection for the trade. There is no resistance or support in the way, and there is an indecision candle prior. So we're going to go and we're going to look for an example right now before we go into the trade playbook for you guys. And this right here is the checklist for a 6 out of 6 trade, meaning all of the criteria is met. This would be an A+ trading decision. Here's an example of a trade that you would not take. So we do have a engulfing candlestick here. But the reason that we would not take this trade is because of the fact that the stochastic is moving higher and there was no indecision candle prior. This is not an indecision candle. This is definitely a bullish candlestick. So we just switched over to a SPY chart, and I very quickly found a really good entry. So right here we have our first setup candle. As you can see, we have an engulfing candlestick off of the upper Bollinger Band with an indecision candle prior. If you're not familiar with indecision candles, they are dojis. If you're not familiar with dojis, go watch some videos prior in the channel where we go over candlestick anatomy, or go Google it, honestly. So I zoomed in a little bit here for you guys and made the background a little bit darker so we could very easily see this. But what we're going to do here, and it's a little bit scrunched together, I understand, but we're going to draw our fib tool, our Fibonacci retracement tool, which you can find in this section of TradingView, the top button right here. We're going to draw it from the bottom of the candle to the top of the candle, such as we did right here. The entry for this system is at the 78.6 level. As you can see here, I'm going to quickly allow you to copy, and you can pause the video right here to see my Fibonacci settings. But what we're going to do is the entry is going to be on the 78.6 level. This is obviously a short entry because we have a bearish engulfing candle. The entry will be right here on the 78.6 level. The stop loss goes at right above the 236 level, as you can see here. And then we have two take profit levels. Our first take profit level is going to be at the 127.2 level, right here. Our second take profit level is going to be at the 161.8 extension right here. And then our third take profit is going to be at the middle Bollinger Band. So, as you can see here, we very easily get down to all three take profits if you waited through a little bit of pain right here. Or you could have taken profit at take profit 1 or 2 very easily and gotten out of this trade with very little pain, except for this first wick that we had here in our first candle. But that is just one entry. Let's go through some more. So here we have another entry. This one is off of the middle Bollinger Band, and we're just going to walk you through this, guys. So remember, engulfing candlestick. Here is an engulfing candlestick. The stochastics, are they pointed in the direction of the trade? Yes, they are trending lower, as you can see here. The orange line is above the blue line. That means that it is in our direction. We need the orange line above the blue line for a short trade and the blue line above the orange line for a buy trade, right? So in this case, we're going to take our Fibonacci tools, again, drawing it from the bottom to the top of this candlestick, making sure it's lined up very, very nicely, and just going through the rest of the checklist here, right? Set up candles off of one of the Bollinger Bands. This one is off of the middle Bollinger Band. This one is through the middle Bollinger Band. Protection for the trade. The protection for this trade is the middle Bollinger Band. As you can see, the middle Bollinger Band is in between our entry and our stop loss. And as you can see, we actually very, very nicely reject off of that level. So no resistance or support in the way. There is no resistance or support in the way. The resistance or support in this case would be the lower Bollinger Band. And as you can see, our second take profit level is before the lower Bollinger Band, the 16218 level. So indecision candle prior, yes, this is an indecision candle because there's a wick to the low and a wick to the high. Not very confident close in either direction. So remember, our entry is going to be at the 78.6 level right here. Take profit is going to be at the 16218 level, our second take profit. And our stop loss is going to go above the 23.6 level. So as you can see here, take profit 1 is at 127.2. Take profit 2 is at 161.8. We get out of that trade with a very nice 1.5R win. So here it seems we have a continuation trade through the lower Bollinger Band. Let's go back through the checklist, guys, all right? Engulfing candlestick, check. Stochastics pointing and crossed in the direction of the trade. If you'd like, you can put a horizontal line to see. Yes, stochastics crossed lower. Remember, orange line above the blue for a short entry. Here we are set on that one. Set up candles off of one of the Bollinger Bands. Yes, this one is through the lower Bollinger Band. Protection for the trade. The protection for the trade is the lower Bollinger Band in this example. No support in the way. We are below the lower Bollinger Band, so there is no support. And there is an indecision candle prior. So again, going through, drawing our fib tools from the low to the high right here. Our entry goes right here at the 78.6. As you can see, we get a wick through that level. Stop loss goes at the 23.6 and the take profit goes at the 161.8. As you can see, this trade in one candle hits your take profit for a total of 1.26R depending on your entry. If you get in more aggressively and you wait for the 61.8 retracement, you can even get 2.3R out of this trade. So I think that was pretty good for examples. Now we're going to go into the Bollinger Band playbook in which I go through some more examples here. So here I went through and I made a playbook for the setups that this trading system offers. And as you can see, I have some of the time frame win rates listed below. The 1 hour time frame back tested has a historical win rate of 79.55%. The 4 hour has an 84.14% win rate. And the 6 hour has an 80.36% win rate. The first play is what I refer to as off the top. Not very creative, I know, but it works. So at the top Bollinger Band, we have an indecision candle and then our engulfing entry candle. Checklist on this play. Remember, guys, engulfing candle, stochastics falling and crossed in the direction of your trade. If you're going off of the top, this is a short entry. This is off of the upper Bollinger Band. That's what I abbreviated as UBB. There is no support in the way of the trade. The upper Bollinger Band is acting as protection for the trade, and there is an indecision candle prior. Again, 6 out of 6, A+ entry. We're only trying to take A+ entries with this, okay? So, trade management on this play. Optional, move your stop loss to break even once the trade hits the 127 Fibonacci extension level. But oftentimes, you can get hit out at break even with that case. So, what I will often do is set and forget the trade, or I will take off a half of the position at 1.272 and then the rest of the position at 1.618 after I move the stop loss to break even at the 127.2 level. Position sizing for this play, this is up to your risk management parameters. For this trade, for this system, I was taking 2% of my total account size per trade. So here's a picture of off the top. Remember, engulfing candlestick, Fibonacci levels drawn, entry at the 78.6, stop loss at the 23.6. Take profit at the 161.8. As you can see, this works out very, very well. Stochastics falling in the direction of the trade. Second setup, through the middle. I know, very creative. We are riding the middle Bollinger Band. And we have 2 indecision candles prior to our entry in this case, right? Just in this example. Engulfing, stochastics falling. off of the middle Bollinger Band. No support in the way of the trade. Middle Bollinger Band as the protection. Indecision candle prior. Here's a picture of the trade. Same trade management, same position sizing. Stop loss above the 23.6, entry at the 78.6, take profit at the 161.8. This trade works out very, very well. Stochastics falling. Off of the bottom. So as you can see, very, very straightforward. This setup candle is off of the bottom. Engulfing candle. Stochastics rising because off the bottom is a buy entry. Bullish engulfing candle. No resistance in the way of the trade. Lower Bollinger Band as protection for the entry. Indecision candle prior. Indecision candle right here. Entry engulfing candle here. Entry at the 78.6. I know the lines are a little bit harder to see. I apologize in the screenshot. But you can see the Fibonacci levels are right here. 23.6 level stop loss. 162.18 is your take profit. Through the bottom. We already went over one of these through the bottom trades, right? We broke the lower Bollinger Band on an engulfing candle and have been riding it since. Engulfing candlestick. Stochastics falling. Off of the lower Bollinger Band. No support in the way of the trade. Lower Bollinger Band as protection. Indecision candle prior. Indecision candle prior. Engulfing candlestick through the lower Bollinger Band. Entry at the 78.6. Stop loss at the 23.6. Take profit at the 161.8. You guys see this is very, very mechanical. It's the same thing over and over again. Same trade management, same position sizing. Through the top. Again, same thing as through the bottom, just opposite. Engulfing candlestick. Stochastics rising. Off of the upper Bollinger Band. No resistance. I can go through these all day long, but you guys get the idea. So, thank you for watching. I greatly appreciate your time. I greatly appreciate your attention. I really, really hope this video proved useful for you. I know it proved useful for me. This system helped me tremendously in my trading career. So, if you enjoyed, please like and subscribe. I'll see you in the next video, and as always, happy trading.